Hello, everyone, and thank you for joining us for our March virtual parent happy hour. My name is Felicia Bragg, and I am one of your academic advisors here with the University of Rochester David T. Kern Center pre-college programs. I'm so excited that you are taking the time to tune in, and we're going to have a really great conversation as we talk all about money with our special guest. But before we get there, I want to know who's tuning in, who's attending, who is checking us out. So on the screen, there is a chat. If you want to go ahead and put your name in the chat, let us know you're attending. Let us know if maybe you brought a friend to watch, because who doesn't want to learn more about money? Let us know you're tuning in. And if there's any questions you have at all during this presentation, drop them in the chat, and we're going to do our best to get to all of them and to answer the questions you have. If for some reason the chat's not working for you, or you would just prefer to use your phone to text in, go ahead and feel free to text us at 585-301-4488. I will also drop that in the chat, so even if you're not using the chat, you can see it. So you can go ahead and let us know you're watching, and again, let us know of any questions you have. Now, before we get started with the presentation, I do have a little plug. Our University of Rochester Upward Bound program is recruiting students. So if you know any current 8th, 9th, 10th, or 11th graders who will be attending either East High, Franklin Upper School, Monroe High School, or Wilson High School next year, please go ahead and let us know. Either, again, text that number to let us know. Let us know that you want us to check out a student. Say, hey, send me a text or follow up with me. I have someone I want to refer to you. But go ahead, because our family of Upward Bound students is growing. We can't wait to welcome more students to the squad. But yeah, if you have any questions about recruitment, if there's a little sibling you want to get involved or something, just go ahead and let us know. And without further ado, I would love and have the pleasure of introducing Andrea from Consumer Credit Counseling Service of Rochester. She's going to share a lot of really good information about money, and hopefully, you learn something. I think I'm going to learn something just on the preview of the PowerPoint I got. So let's get into the material. Andrea, feel free to take it away.
Wonderful. Thank you so much, Felicia. So this is Andrea Colleen. I work at Consumer Credit Counseling Service. I'm hoping you're tuning in. I'm so excited. If this is something that you're interested in and listening to, I think everybody could really benefit from just different strategies of managing money. It can be a stressful thing, but it can also be really motivating if we really develop a plan. So this presentation will talk about that. We'll talk a little bit about student loans. We'll talk a little bit about reaching our goals, some of the resources our agency offers, as well as just creating a budget and talking a little bit about debt. So our title is called Building a Solid Financial Future. And just a few slides on who we are. So we are CCCS of Rochester, and we have been in the area since 1970. So we have been in Rochester for about 50 years, and we're very proud to be the only locally based nonprofit credit counseling agency in the area. And again, we just want to say thank you so much for attending this tonight. Hopefully it gives you some really great information. A little bit about our mission. Our mission is to focus on the financial health of individuals and families, helping those that we serve to achieve financial wellness through the different programs and services that we offer, which I'll touch on at the end of our presentation. But we are a member of the National Foundation for Credit Counseling. We're also licensed by the New York State Department of Financial Services, as well as a HUD-approved housing counseling agency, and we're a member of the Better Business Bureau. We have an A+ rating with them as well. So here's my contact information. Please feel free if you have questions about anything or you want to touch base about something, please feel free to shoot me an email or give me a call with whatever we need. So here's what we're going to talk about tonight. So there's a lot, but I wanted to kind of cover a lot of different topics. So the first thing we'll talk about is our financial goals and just kind of being aware of our money. The term money mindfulness is a big one this year. Just being mindful of everything, of what we're doing. We can go through a whole day sometimes without realizing, or what is it that I did today? Where did my money go? So we want to really focus in on that. We'll talk a little bit about how to get organized or how to get started with managing our expenses. We'll touch on some strategies to manage that, as well as how to consistently stay on track with reaching those goals. And then I'll have a little bit on student loans and planning those out. And then we'll end it with how you can connect it if you do need some support. So I will start off with some stats. So currently the average American has just under $16,000 in credit card debt, and 39% of us carry it from month to month versus paying it off in full. When it comes to college loans and student loans, typically the student will graduate with about $40,000 in student loan debt, and 1 in 5 borrowers owe more than $50,000, while 5.6% owe more than $100,000. So I just thought it would be interesting to pull those statistics in before we really get, moving along, because I want people to know that people do have debt. It can be overwhelming when we're trying to manage finances, or like I said, motivating. But it's not about being perfect. Sometimes people really don't want to talk about managing money, or get a little bit embarrassed with maybe if they've made some mistakes with it, or maybe they have some debt in collections. And we're here today to say that's not what this is about. This is just a fresh start to just try to re-energize our thoughts and maybe develop a plan to really help us reach those goals, but know that we're not alone. There's a lot of people that carry credit or debt or other debts. I mean, if the goal is paying off those debts, then this is a great place to begin. But I like to put that out there because I just want people to kind of know where we stand. And a few other statistics currently about 52% of Americans are spending more than they earn. So it's not uncommon to do that. We don't want to do that, as it could impact the goals we're trying to reach. Or if we do, we want to at least be aware of it so that we can have a plan to reach our goals, or to, stay current or get current. When it comes to, managing finances and staying current with, critical expenses like our mortgage and our rent and car loans, student loans, things like that, it all starts with having some type of a plan, right? And it's not easy though. I don't know if anybody would agree with me, but we do shop. We buy things. It's okay to do that. We're in a society now, though, that it's really easy to do that. I mean, we're used to just, going online, click, 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 and within 24 hours, we have whatever it is that we wanted waiting at our doorstep. And there's a multitude of ways to pay for that. So whether it be, via our own bank account, putting it on a credit card, financing it, it's really easy. So with that being said, about the past 25 years, which maybe it's been a long time, but it hasn't at the same time, people's expenses have increased by more than 30%. So we're spending more. Not that the prices have increased. That's not what this is. This is just saying we spend more now than we did 25 years ago. And the average American is spending about $1.33 for every dollar earned, which would tie right into the fact that we're spending more than we earn. 1 in 4 Americans have more debt than savings. So again, not uncommon. If it's a goal for us not to have that, then we're in the right place. We're going to start looking at things and figuring out a plan. But that's just kind of where we stand right now. And about 50% of Americans are currently setting up a budget. I don't know how well they're sticking to it, but definitely that's not part of this, but just setting it up, which we look at that and we're like, okay, 50%. But that's 50%. So half of America is currently setting up some kind of a spending plan. Everyone else is not. And about 21% of us regularly have monthly expenses in excess of income. So meaning that the income that we take in every month is not supporting our fixed basic expenses. So not enough to support our mortgage or our rent, utilities, auto loans, student loans. Not that we're spending too much, it's just not enough to do that. And that does happen. And, that's why I'm really, really glad I didn't even get the chance to say thank you so much. I'm very happy that we can present this to you, that we've been able to partner with the Current Center today. All right, so financial goals. So I don't want to make this typical. I don't want to make it boring. It might be a little, but I'm going to try my best to really try to intertwine this into our everyday activities, right? So why have these goals? It allows us to stay consistent with paying critical bills on time. So like I mentioned, our mortgage payments, our rent payments, utilities, insurances, all things like that. When we have a goal, I know it may sound like that's not the first reason to create a goal, but when we have a goal that we're working toward, we can automatically become more aware of what's happening, because in order to reach that goal, we need to have a plan with our other bills. So this will allow us to stay current, because we definitely want to do that. Gives us direction and purpose. So when we have a goal and we're working towards something, there's that motivation behind it. It allows us, of course, to build some sort of wealth, and it gives us that peace of mind, that financial peace of mind. There's a lot to be said for that. I'm not sure if anybody's ever created a goal and reached that goal. I think it's probably one of the most satisfying feelings, just being able to say, I did that, I accomplished this. It's a wonderful feeling. So giving us that peace of mind, and it's motivating to create other goals, especially when it links to our finances. I really think it's just the grand cusp of everything that really holds everything together. It helps us stop wasting money. Who doesn't waste some money sometimes, right? Maybe there's someone out there that doesn't. That's awesome. But for the most cases, we may waste money, and you know what we might do? We might go home and beat ourselves up about it and say, oh, why did I do that? I shouldn't have did that. Or maybe, we're in a relationship and there's someone that wastes more money than the other. And that can be frustrating too, right? But when we have something that we're working toward and we see ourselves succeeding in that, we may not, waste the money as we did before. Maybe we can even budget a little waste, when it comes to spending things like that, so that we know at least how much we're spending. And then, of course, that feeling of financial security, because we've reached those goals. Some of the big examples, we have paying off debt. Now, that's first with consumer credit, paying off debt, getting current on loans, credit cards, mortgages, rent, things like that. So paying off debt is the number one goal, of course, that we see. Saving for retirement is a big one. I feel like it's more of a long-term goal. So maybe people tend to know that they need to save for retirement, but I could be wrong. But it seems like people start to really, really create that goal as they get a little closer to that age. At least that's kind of how I feel. Building an emergency fund. Now that's the one that can kind of sound boring, but can you imagine? And maybe we've done this before, but the next time we get stressed out about a car repair, because that's what emergency fund would be for, an unexpected expense, maybe an unexpected medical expense, a speeding ticket, something like that. Hopefully not. But I mean, if that's the case, we have that money set aside. I can almost guarantee you that we'll make a more sound decision when it comes to managing our finances or paying for that debt. If we don't have the funds set aside for an emergency, we'll do the first thing we need to do to take care of it immediately, which might mean, having some unwanted debt, putting it on a credit card, paying additional interest, falling behind on something else that could hurt our credit. We don't always think clearly in that respect because we're nervous, and it's hard to really make that financial decision. So when we're building some kind of an emergency fund, maybe it's in conjunction with other goals, we can really, really build our wealth, because you can save more money when you're paying for something out of something that we've set aside specifically, if that makes sense. Another one, of course, buying a home, getting an apartment, or paying for college, right? Or paying off the loans, or just preparing for college. I know everybody's in different ages and stages. So we might have some college students, we might have some high school students, we may have parents online. So I want to try to make this suitable for everyone. So when we have the goal, we want to create something that's important to us and motivates us. So make our goals fun, have more than one goal, and connect that goal to something that has great value in our life. So whether it's our feeling of security, that's a big, big value that many people want to attain, right? Just to feel like, at least I know I'm doing things right. If I wanted to, if I had an opportunity to switch a job with a lower pay, but it's something I really want to do and I know I can grow in that career, it can give you the opportunity to do that. If we create financial goals around it. I mean, that was just an example, right? But something valuable. So that was our security. Maybe it's our family. So maybe owning a home or paying off debt so that I can potentially own a home. Maybe I want to manage my expenses better because I want to show my kids how to do it. I want to install this in them. That would be a value. So the goal would be whatever is linked to that value. So, teaching my kids really how to manage money and look at money in a healthy way, well, and have a sense of security of where we're going to live and do that. And then the goal might be attaining home ownership, paying off debt, saving for college, right? So it's not just setting up that goal and making it look good, right? That's part of it, but it's also really thinking of something that really motivates us, that's really important, that's going to help our life look the way we want it. Right? And other aspects of our life will strengthen. If the goal is paying off debt, guess what? Your credit score is going to go up, because if we can start really reducing our debt and we're consistent with making our payments on time, your score will naturally increase. You'll be more aware of what your credit score is. So that's something to, really, really think about. We'd save thousands of dollars of unpaid interest, right? So that's another aspect that will strengthen. So, and then our sense of pride in ourselves, right? That's a lot to be said for that. I guess that's a value. But when we're thinking of these goals, I don't want to just say, okay, put them on paper and make them work. Think about what it is that we really, really want and try to work toward that. What gives us that motivation? And then when we're defining the goal, there's three things that we want to consider when we're creating the goal is what the goal is, buying a house, paying off debt, whatever it may be, achievement amount, so how much do I need? And then time frame, how long do I need? And then work it in with our regular budget. So we'll show you some examples of a spending plan. Everybody's different, and all that, but just to kind of pull it back for one moment, I'll use this really easy, simple example. So if I want to save $1,200 in a year to have an emergency fund, that would mean if I needed to start saving right now, I would give myself, that's 12 months. For my example, everybody's different, paid every other week, right? So 12 months, that means $100 a month. That means $50 a pay period. That means $25 a week. Then you want to stop and think and say, what did I spend $25 a week? What did I spend in the past 7 days? What did I spend $25 a week on that I didn't even think about, right? Or that I forgot about. So, and then we can kind of figure it in and you say, do I want this or do I want this? So, but just to bring it, make it real, breaking it down with every pay period. That's honestly, I think, one of the biggest keys, and just having some kind of a plan for it, right? So just a little insight there. So money mindfulness, this is my favorite term of 2021. And I'd like to say I made it up, but I probably didn't. But being present with your money and spending, right? Notice what you do and how you feel about spending choices we make. Let's be mindful about everything. It's not as easy as it sounds. We're busy, we're working, we're going to school, we're taking care of kids. Maybe we're working at the same time of taking care of kids. I mean, everybody's in a different situation, right? But being aware, there's so many distractions that can make it a challenge, but how we handle these distractions can truly make a difference. So being present with our spending, if it's financial goals we're really trying to attain, creating that positive mindset. And I don't want to sound, I don't know the right word, but because we're gonna have times where we're frustrated, right? Or we're not feeling great about it, or maybe I'm having a bad day, so I feel like I want to go buy something to make myself feel a little bit better. So I'm going to take that money and spend it, right? Or put it on a credit card. But we want to kind of have a plan for that. Does that, when I'm feeling frustrated, do I just take a second out for myself, or if I'm able to take a breath, and just think about it, but trying to the best of our ability to stay ahead of things. So whether creating that positive mindset might mean I need to stay organized so that I don't get distracted as much and I can stay focused on it. I can continuously, think about the outcomes of the goals I'm trying to reach. I can look at the accomplishments that I've made, so far, and feel proud of myself of that, right? So this can be used for anything. I mean, our focus really is spending today because that's huge. But think about what's most important. Envision yourself reaching those goals and empower ourselves. Because a positive mindset is really important to any major goal, whether it's a health goal, a career goal, or a money goal, So having that mindset as positive as we can be, and having a plan for it. Because when it comes to spending, I didn't have this in here, but it's a lot of it's really based on emotion and how we're feeling. And I know everyone's different. You know, there might be a situation where it's just hard, just we're struggling because, you know, with everything that's going on, there could be a reduction in income. So when I'm talking, I might say, this isn't pertaining to me, you know, but it is, you know, we still want people to be able to reach their financial goals or have some kind of security, you know, through planning. So I know that everybody's on different, you know, in different situations, but those emotions, you know, a lot of times we might say when I'm feeling down, but how about when we're feeling happy? You ever feel so excited and so happy that you just go out and do something, don't even think about it, and that might pertain to money? I do. Even though I should know better, but I know that those emotions can get to us. We want to really have a plan for it.
Andrea, I just want to jump into, and I think to your point, and this might speak a little bit more to maybe our high school students, you know, once you get a paycheck and like, everyone's like, well, I'm going to run to this restaurant after school, or like, I'm buying these new shoes. Like, think about your values, what's important to you. Like those new shoes, that new thing might be like cool. Everyone else has one as well. But like, it's like, I really like plants. So like when I go out and I buy a plant, that makes me happy. So like thinking about when you're using your money, how does it bring you joy? How does it bring you like that, you know, fulfilling those things that you need in life? And I think that's important too. Like, don't compare yourself in terms of how other people are spending their paycheck. And I'm assuming that's something we can talk about more because that happens at all stages of life. But remembering your values and what is important to you, whether it's your education, making sure you're paying for college, is it your car, making sure you have secure transportation, whatever it is, your values for money is your values for money. And make sure you stick to those, because everything Andrea is talking about in terms of like what's going to make you feel better, it's what makes you feel better, because at the end of the day, it's the money you're working with.
True. You're right. That's a great point too, especially the comparison, because we do that, especially, and I mean, I'm not like just assuming, because I know everyone's, like I said, different ages, but I know that, even though it was a long time ago, but you know, I have kids that are probably, I have, you know, youth in my life that we've experienced, and just being young at one point, that happens more. Like the older you get, it seems the less that it happens, but maybe not, you know, I can't tell you the times I see, you know, people buying these cars that are completely out of their affordability range because they just love it, or they just, you know, want to feel good when they're driving it, but it's just, or comparing it to someone else. So yeah, you're right. That comparison thing is there. And so are the emotions are huge. All right. Getting organized. So the first thing we want to do, so now we know the goals that are, you know, what we're working toward. We're mindful of our spending, or at least more mindful. We don't have to be perfect. It's not about being perfect. It's about having a plan, feeling more secure with the decisions we're making, educating ourselves, and trying to put something together, some kind of a plan, right? So organize ourselves, clear our space, have a spot. So whether it's your desk, probably a desk, I would imagine, or a dining room table, I mean, you know, wherever your space is, clear it. Even this is a point too. This is a whole nother workshop, but I took a workshop on this and I felt like it made so much sense. Sometimes we don't think clearly, or we feel a little bit more stress or anxiety because something else is on our mind. And sometimes that could be, maybe there's other areas of my home I want to clear out. Maybe I know I gotta, you know, take care of this or do that or do this. But a lot of it could be just clutter. I don't know if that, I mean, it might not be pertaining, but I swear there's something to it. Just knowing that, you know, I just got to clear things out. Maybe it's the mail. Maybe I need to go through all my junk mail or my emails. So whatever it is, maybe there's a lot I got to get done at work, and I want to just take care of all that before I address this. Declutter so you can clear your mind, then have a spot designated to do your goal planning, and write things down and have your spot for your budget. There's 5 components we're going to touch on. So we touched on goals, right? That's one of our number ones. Usually people go right to this second one, budget numbers. So when it comes to managing our finances, sometimes we skip the fun part Maybe the fun part's the stressful part. Maybe we know there's debt, or we have to get current on a loan, or we're behind and we're getting an abundance of fees. So maybe we skip that part, but we don't want to miss the goals. We want to create those because that gives us that value. But the budget part is what people go right to. So this is where you look at your income versus your expenses. And when I say expenses, I should rephrase that. How much does it take to support your needs and your household? Not necessarily how much we're spending. We want to know what we're spending, but before we can even do that, then we have to kind of figure out, what do I need? What do I make? And then step 3, what am I really spending? And that's okay. What does it fit within my budget? What are things I can make changes on, or I don't want to make changes on? We might not need to make any changes, but if we think we're like falling short, or we feel like there's not enough there, that's something we need to revisit at that point in part 3. And then part 4 is my action. So, all right, I got my goals. I know what my budget looks like. I've made a few changes. Now, what do I need to do? Do I need to pull a credit report? Do I need to contact my bank? Do I need to be careful of where I'm going? Do I need to close down my Amazon account? Just kidding. Or maybe I'm not. I don't know. What do I need to do to, I shouldn't even say Amazon. What do I need to do to have a plan, right? And create a little bit of a checklist. And then a backup plan. If things don't work out as planned, what else can I do? So just kind of have that in the back of our mind. And then we talked about your goals. Another thing, this is your credit report. I think I have 2 slides on this though. Annualcreditreport.com. So if the goal is about your debt, maybe paying off debt, or at least understanding what you owe on your debt, where if there's collection accounts, if there's not collection accounts, if it looks okay, or maybe looking at all your balances together and adding it up, because that can be scary too. Annualcreditreport.com is a great site. And it's the official site, and it's a free site where you can get all 3 of your credit reports. I have a few more slides. I'll have a little more data on this. It just happened to be here too. And then look at your budget. So look at your bills, your initial comparison. This is a really old school example, but I like it though, because it kind of gets to the point. How much do I make? How much do I spend? You see that there's fixed expenses and there's flexible. So we can see the fixed stay the same. We got rent, we got mortgage. Top priority, property taxes, trash collection, car loan, car insurance, student loans, things like that, right? Things we have to pay. But you know what I feel like though? I have to just explain this to you or express it to you. So we have our flexible. So I feel like a lot of times when we're creating our budget, we go to our fixed and we're like, okay, good. I'm good. My fixed expenses are good. Flexible, I'll figure all that out later. Flexible expenses are needs. Flexible expenses are transportation and groceries and even clothing or utilities, depending on how they're paid. And I don't know, sometimes your groceries or your transportation could be just as much, or if not more than our rent or mortgage, if we don't know how much we're spending on it. So flexible expenses are just as important as your fixed expenses. We just might not have a good amount on we may not have like a true amount of what we're really spending. So I know everyone's in different situations. So I don't know who's doing, the grocery shopping or, for clothing shopping or whatever it is that we're doing, but we can't always get true numbers on those. They're good in respect that we have some control over it, but we only have control when we create that control, and we have control once we know what we're currently doing. So flexible expenses are very important. And it's just something that I feel like doesn't always get addressed, right? Another category of expenses that they're included in here, they're kind of intertwined, so I don't love this example, are periodic expenses. So periodic expenses are the expenses that catch us by surprise. Periodic expense might be something that's not due every month, maybe every quarter, or it could be a medical expense, or it could be my brain went away. It could be clothing, we might not be buying that every month, or that unexpected car repair, you know what I mean? So it's important to kind of figure something out for those two on a monthly basis, like what I might spend over a year and then average it over 12 months. So when we're putting our numbers in this budget and our goals, we can build our goals right in this budget too. We're not shortchanging ourselves, because a lot of times when we do a budget, we so bad want it to look good, like we have so much money left over that we don't put everything down. So it's important to really do a nice thorough budget, look at it for what it is, and then make changes if we need to. So this is our, I don't even like to use the word budget. Let's use the word spending plan, even though I know I'll use the word budget again. And then this is our journal. So for those of you that are watching, you know, especially if we're students, you're looking at this and you're like, oh, this is just a journal. I'm not going to write anything down. You can keep track in your phone. There's all kinds of, I think there's apps, and there's like You Need a Budget, the mint.com. There's different ways, or we could just write it just for like a week. Where's my money really, really going? Because without really having a good understanding, and guess what? Remember that trivia, those statistics we did in the beginning? Most people don't know exactly where every dollar is going. So just giving ourselves a good example, because this person spent $175 over a week's time. So this isn't the fixed expenses. This is just the stuff, the other things we forgot about. It's not that it's wrong, right, good, bad, but if we hadn't kept track of it, we wouldn't know what to reduce. So that's something to kind of think about. And then if I'm looking at my budget and I'm saying, and by the way, I'm sorry, this person back here had a deficit. They were $100 short with their budget. So you can see that a lot of times people get here and they're like, oh my gosh, I'm spending more than I'm earning. And you know what they do with their financial goals? They stop. I don't have enough money. Let me figure it out. Let me try to make more money or do what whatever it is. This is where we should grab it and continue it and try to figure out how to resolve it. Right. So that's where the journal comes in and all that good stuff. And then we got to figure out, do I need to make more money or spend less money? Because as much as I hate those options, or not that I hate those options, there's only two options. That's really the truth. If I have a deficit in my budget, I have to figure out how to reduce something or take in more money or a little bit of both. Right. Not that I'm telling everybody to go out and work another job or anything like that. It's just something to think about.
Mm-hmm. And Andrea, I think to your point too, like the time that it takes to like go and actually acknowledge that, okay, I'm $100 short every week or every month because of this. Oh my gosh, I'm spending this much every week that I'm not allowing for in my spending plan or my budget. Mm-hmm. Like honestly, just taking the time to acknowledge it, you're doing yourself such a good service, because that's the first step. And like, okay, then I can achieve my financial goals by making those adjustments. So there's no judgment, no hate, no shame, no nothing. It is what it is. And this is where we're moving on from.
Yeah, you're right. And you know what too? Sometimes people know they might have a deficit, so they don't even want to look at it, right? But you're right, acknowledge it, because we can't make any progress without doing nothing. I know that came out funny, but to progress, we need to have some type of a plan. And you know what else I'll say too? A lot of times, and I know, again, different ages and stages, but you might have a budget and then you fail at it, or feel like you're failing at it and not continue with it. Start to do it again and then stop, and then start to do it. But that's not normal, because even when you stop, you started at one point. There had to be some kind of a progression, even if it's something you learned out of it. You know what I mean? So I would say we could do that with ourselves, with everything. It's not about being perfect. It's just about progressing. And even if we feel like we failed, we didn't. Right. But even if we beat ourselves up and feel like we failed in the past, we still want to, keep with it and build that plan and reach those goals. Because even if we got halfway to a goal, you're halfway closer than you were when you started, so I mean, that's something to really think about. So on that note, this is the new budget, right? This is where they did. And again, I know some of these expenses are like kind of low, but it's, again, just an example. So we have income, we have expenses, they made a few changes, credit cards, gas, made a few changes. And so now, instead of having a short or a deficit of $100, we have a surplus of $240. So with that being said, we have to grab that $240 and we have to do whatever we need to do with it. We have to reach those goals with it. So set up an account where that money is trickled into immediately. An automatic account. So whether it's a bank, where we bank now, or whether it's a completely separate bank, maybe, so that we can't transfer. We don't want to do that. It's so easy. Transfer money from our savings to our checkings. I mean, it's nice to have that option in case of an emergency type of thing. But if we're really trying to build, that can stop. That can stop us from doing that. So set it up. you could have that same account. And you could like, okay, you know what? This is going to be my savings account. And if I get a tax return or a stimulus check, or anything like that, we say it like we're expecting them now, but anything like that, that'll be where that money goes. Right. So that's something to think about there. And then have money deposited out of each pay period. So whatever, so if you're every week, if you're biweekly, and I know it could be a challenge depending on our pay, you know, if we're not consistently getting the same amount or whatnot, but we still want to have some kind of a plan, even if it's not as much as we want, just something to set aside. Honestly, like, can you imagine from the very, very, very first job you've ever had, if you saved $20 out of every paycheck, 20 or 25, I know, again, different ages and all, and you just did that through life. I mean, that you'd save a lot of money over time, you know, especially with like building interest and things like that. So it's just something to think about, right? So whatever's going to make it easiest for us. And I honestly, truly stand by just having it automatically taken out and set aside. That's just the advice that we would give. And then we want to have our visual, right? So this is our calendar. So those of us that are on the call that, you know, we have our plans, we know when our bills are due and all that. We don't use a calendar. That's fine. But I will tell you that a calendar is life-changing because it helps you plan it out. The first thing you put on a calendar is your pay dates, and then your fixed expenses, and then an average of what your flexible or periodic expenses might be. Because it is so easy to spend more money that we have available in our bank account on things that need to go somewhere else. And then we get so stressed out and so worried that we either start putting on a credit card or we don't save. We'll say next month I'll do it, next month I'll do it. And it can just become like habit forming. So the calendar is great. I just love using a calendar. In this example, someone has like money in their bank account. They're going to get another paycheck. So they have $14.75 available, but they have $14.55 to pay left to pay out through the month. So if I went back and I just saw $14.75 and I knew that I was halfway through the month, I might be apt to spend a little extra here or there. But then, you know, in the grand scheme of things, it added up. Maybe if I spent an extra $100, I wouldn't have had enough. You know what I mean? And maybe that would stop me from paying off my credit card or not reaching that goal. So things to think about.
Andrea, going off the calendar, I have a question actually.
Yes, please.
So like, we have lives and we like to do fun things. So what are your thoughts on like, if I know, we have like a birthday coming up and I know that it's, not a COVID pandemic going on, but we're going out to a restaurant and I know that's something I will be doing this month. In terms of a calendar, is that something that you would recommend maybe listing? And so you just know ahead, okay, I plan on spending this money. So like making sure you have it, or what would you recommend in that situation?
I mean, whatever works best for the individual. I mean, if you have all of your other expenses listed on a calendar and you have a plan for that, that's fine, but you could pop it on a calendar. It's definitely not going to hurt. So maybe it's, 2 or 3 weeks out and you can say, I think I'll be spending $100 so that out of each pay period, I'll set aside $50, you know what I mean? Or I'll leave that available to me to be able to spend. So it won't hurt, or the other plan is to have a specific bank account for things like that. So when it does come to, gift giving or, spending like that, to where it's just one specific bank account. So out of every pay period, maybe $25 goes in there. And when it's time to celebrate, I have something to tap into. It really can be done. It's having those separate accounts. I mean, that's just something it works for a lot of clients. It works for me, but for specific expenses such as gift giving, even grocery shopping, it just really helps us get a clear picture of what we really have. So good though. I hope you have fun when you go there. So let's talk about some strategies to manage our debt. So you want to, if this is the case, classify your debt. So unsecured debt means like credit cards and charge cards. Secure debt is our auto loan, our mortgage. Non-interest would be like collection accounts, judgments, past due utilities. Non-dischargeable would be our student loans, our tax liens, child support, and organize it. And if you need guidance with this, our agency is always here to support. We can always help us people through that. Have your budget, have your system. Just a little bit, we have a little info here on like, if it is credit cards, you can always call the credit card company to see if they'd be willing to reduce the interest rates. We want to be careful not to like settle debts that are current, meaning paying less than what we owe. It's very hard to settle a debt that's current. It's more likely to happen if the debt is in collections. Sometimes people will want to take out like a balance transfer to pay off all their debt. And it's not that that's a bad idea, but it's not the best idea to make a habit of that to where that's what we're doing. I've known people and met people and counseled people that's how they've lived their life for 15, 20 years, is every 2-3 years, they just transfer the balance and it's the same debt that they have. Even if the interest rate's low, it's compounding. On a credit card, it's interest on top of interest. So the amount of interest that you paid could very well be more than that debt, even if the rate is low. And it can also give us that false sense of security that I have a low interest rate on my credit card, so it's okay for me to splurge more. I mean, I know that sounds bad, but it can, there's that emotion, you know, so something to think about. So just a few tips on that. Pay monthly on smaller balances, take action to avoid judgments. So if anyone is facing a situation where, you know, the debts are in collections and they're about to go judgment or go legal, let's not make that. Let's do whatever we can to not let that happen. We don't want to ignore that. We want to address it. And honestly, please reach out to our agency. You know, I mean, if that's something that someone's struggling with is, you know, debts going to collections, they're getting phone calls, even if they don't feel like they're in a position to pay, we could at least guide someone or possibly set something up, you know, help you set something up with the creditor to get those payments on track. So when it comes to methods of debt, so we have 4 steps for Snowball. You might have heard of Snowball, right? List all your debt from smallest to largest. Make your minimum payments on all your debts except the littlest, the smallest. Pay as much as possible on your smallest debt, and then repeat until every debt is paid in full. Then there's your Avalanche, which is basically the same idea, except for taking the extra money. So in this case, they had $240, right? And then paying it on the highest interest rate. The question of the life is which is better? And the answer is, it depends. Everyone has a unique situation. It depends on your debt load. It depends on your income. It depends on your interest rates. People get in arguments over which method is better. I will say, if we're utilizing a method and we're paying extra, that's the best. That's the best thing we could possibly do. But again, it really just depends on the situation. So that's where like a debt calculator might come in helpful or handy so that we can kind of see how much we're saving. Oh, I told you the credit report. So annual credit report. So there's Equifax, Experian, and TransUnion. Annual credit report is a site where you can get all 3 reports for no cost. And you can actually get them once a week until the end of April, I believe. So it's usually once a year, but with COVID, they had made it available to where we can view it weekly. If you hadn't pulled your credit report during this pandemic, I would highly, highly, highly recommend that you do it. Not to scare you, but there's lots of fraud, you know, going on out there. I would probably even recommend issuing like a fraud alert, you know, during this time, because there are scams when it comes to unemployment. There's scams with it when it comes to the vaccinations, when it comes to stimulus, all kinds of phishing attempts. And really the down and dirty of it is they're trying to get our information. The wrong people are trying to get our information. Also, you might be in a deferment with your student loan or a mortgage or something like that. Make sure that it's being reported accurately on your credit report, or just to see what you owe. So credit card, like what we do at Consumer Credit is we help people to look at their income and their expenses and their budget to figure out the best ways to manage that debt. If someone's in that situation, we do have a program that can help someone to consolidate their debts into one payment while paying a lower interest rate at Consumer Credit Counseling. So anyone could reach out to us here in Rochester. So we're not a debt settlement service. So not that it's good or bad, it's just that that's not what our agency is. We don't settle the debts. We're a nonprofit agency, and we negotiate the interest rates to pay those balances down. So I do want to just add a few things on student loans. So you may or may not know, but so there's 2 types of student loans. Typically, we got federal loans and we have private. If it's a federal loan, it's funded through the government. There's more repayment options. It could be subsidized in some cases. Private loans are typically, why is it doing that? Through banks. There may not be as many payment options, and they're typically not subsidized, right? So it all just really depends on what type of loan we have. So you may have heard this, but maybe if we have college students or parents, high school students or parents of high school students or individuals in college now, you want to always try to use all your federal money first before we start taking out private loans. Private loans are usually taken out if we don't have enough to cover the cost of school, or whatever it's going to be. So it's not that they're bad. It's just that we want to utilize our federal options first because there's more repayment options and things of that nature. Okay, so we have federal, we have private. Studentaid.gov is a great website to visit if you're looking for more specific information, especially on what we currently owe. And then you have subsidized and unsubsidized. So subsidized is there's no interest while in school or in halftime. There's payment options. It's dischargeable with an undue hardship, which is still quite the challenge. So dischargeable means that it could be forgiven if someone, well, they both are really, if there was a situation where someone really, really couldn't pay it. It's just that those situations are very far and few between. And then your limits vary. So with unsubsidized, the interest is charged and there could be some fewer repayment options. So if we have student loans or we're looking to obtain those, just know that difference, right? So you know which are subsidized, which are not, is it federal, is it private, what umbrella does it fall under? And then plus loans are typically for graduate students or a parent borrower, and interest is charged. And the max is the cost of attending minus your financial assistance. So however much the school was minus whatever you received in funding for that. Again, website to kind of review that. So the first step, I know everybody's, like I said, different stages here, but FAFSA is a free application for federal student aid. So for those of us that are thinking about, or that will be going to college, that maybe, or parents or whatnot, you got to fill out that FAFSA form and give them your data and all of your information. There's need-based. So your need-based is basically when you're first starting school and how much you need to support it. So it's not as much, based on credit rating and things like that. But it is more credit rating for parent loans and graduate loans. So they can't check, if it's 18-year-olds trying to, get their student loan and get everything in order, there's probably nothing to check them, with credit when it comes to that because they're too young to really have established that. So that's where the term need-based comes in, what's needed. Credit is more for people who, are working or things of that nature that need that loan.
Just a point out for if we do have any parents on the line or like college students, soon to be college students, when you're looking at that financial aid offer that colleges are sending you, if there is anything about Parent Plus, typically not all schools, but like some schools put it at the very bottom. They might not fully like list what it is and everything. Make sure that you take the time to fully understand what all these things are coming out as. If you see words like scholarship, grant, those are great things that you don't have to pay back. If anything says loan, if it doesn't really, like if it just says college name award, awesome. But is that a scholarship, a grant? Will it be something that you have to pay back? And then if it is something that you have to pay back, you determine you're comfortable with that, fully understanding the means of what it means to pay that back. The federal loans, as we said, at least as of now, and you always want to check and be up to date on everything. But as of now, you don't pay that while you're in school. But while you're in school means, okay, you're taking classes. So whether you have to take a leave for, a semester or two because of something, or you graduate, understanding all these terms, it can be very overwhelming, but that's why you have, if you're an Upward Bound, you have your Upward Bound advisors here to kind of talk you through that. You have programs like CCCS of Rochester. There's so many things that you can do to just even understand what you're looking at. Especially when, whether it's like looking at car loans, whether you're looking at your financial aid packages, there's so many numbers and, you don't always speak the lingo, it's like, refurbishment and all those things. So don't be afraid to ask those questions and don't be afraid to like get it down to what you understand because we're all at different levels. So please do not be afraid to like ask those questions, to advocate for yourself, just so at the very least, you have all the knowledge you need to make a decision.
Right. I know that's so important because it can be so intimidating. I mean, honestly, we had a parent loan, for my stepson, and I didn't even working at consumer credit for as long as I did. When it came to doing all of this, it was brand new. You know, even though we're familiar with all those terms, understanding it can be overwhelming and confusing. So if there's any support or guidance, or just taking it step by step, you know, doing our research and just truly having that solid understanding. We don't have to be experts at it. This is all new to a lot of people, especially parents and students. Oops. And then just a few things when it comes to, I just want to see where we are for time. All right, almost done here. The benefits of the student loans. So we don't want people to, you know, get so overwhelmed with debts and student loans that they can't do anything else, but we don't want people to be fearful of going to college either because they're afraid to take out a loan. So there's that balance. It's typically lower interest rates. There are payment options. So these 5 options we'll talk. So a standard payment is a payment based on what you owe over 10 years with interest. So they break it down, you know, over 120 months. So if you owe 28,000, you're getting 5% interest, it'd be $297 a month for 10 years. So you always are going to pay back more than what you owe because there is interest applied. So the faster we pay something, the better. But this is a standard option. If somebody was in a graduated repayment, we don't see these too often, but it's where payments increase over every few years. So you'd still pay that same amount back, but it might start off at 150 or 200. It all just really depends on your comfort level, the type of loan you have, your income. But they can be paid a little bit longer over time, but they can start off lower and increase depending on, you know, what's affordable. So that's the graduated. It's like a slow increase. Extended is a little bit different. So you can see like 35, right? And then 52. So extended extends it for up to a 25-year period. It's good in some respect because it can get your payments down so that they're affordable. And it can, of course, this whole workshop, it's sustaining those payments to sustain that credit. So, but if somebody borrowed 30,000, 5%, it's because if you took a longer time to pay it back, you're going to pay more out in interest. So even though that's an option, and it could be a very good option for some, just depending on, you know, their situation, just know the difference. So you have standard, you have graduated, you have extended, and then you have income-based. This is a popular one that depending on your situation, right, and how much you earn, but this is like how it's based on what your income is, and it's a portion of what's affordable for you. So there's pay as you earn, which is typically about 10%, income-based repayment, which is 10 to 15, income contingent, which is about 20% of your income or affordability, and income sensitive. So these are all income-based plans, but there's different levels of them. It can get, see, this is where the confusing part comes in. It just depends on the type of loan that you have and like when it was taken out and all that. But the thing about this is that it could be very helpful because especially depending on one's income, is that you could still get the lower interest rate, and you still, if you pay it off within that time frame, you still may not, you know, pay that much additional over time in fees. And the payments could fit within your budget. The other thing about this one too, is that if you work for a qualified employer and you're in this plan for about 10 years with no missed payments, and you're truly enrolled, sometimes there's a little bit of a challenge there. People think they're enrolled and they're not. If you did this for 10 years and you have a qualifying employer, whatever you had left, so say your payments were $100 and the balance left after 10 years was say $18,000, that $18,000 could be forgiven. There's a lot of rules in there, so I'm not trying to make it sound, you know, easy, but there is, I have a slide that I'll talk about that as well. And then consolidating. So consolidation is just taking all of your loans into one payments and reducing, you know, having one interest rate, one payment, which typically can reduce your payments, but you just want to make sure, you know, is it going to alleviate any other options for me when it comes to repaying, things like that. So federal loans is one option. Private loans is based on the lender. The private loans are like the loans through like a bank or lending institution. They're not going to follow the same rules as the government would. And then this is what I was talking about, the income forgiven. It must be in an income-driven payment. So you couldn't be in a standard payment because you'd paid off in 10 years and qualify for this. But you know, you must look, you have to qualify for these plans. They have to be enrolled in it. So you have to make payments on time. And if you default, you got to start all over again. If you go to different jobs, but they're still within that same realm, typically nonprofits, I believe most schools, not every school, but like public schools, hospitals, things like that. A lot of nurses qualify for these plans depending on where they work. That's what this would be. But like I said, so you can go to one job and if it's within that same realm, it'll carry over. If you go, so say you're in a plan and then you stop working for a while, or you go to like a private, not like a not for profit, you never lose the time you put in unless it falls in default, which default typically is about, I want to say it's about 180 days past due. It could be a little bit more than that. And then these are the kind of agencies. And there's more data at this website, but government jobs, tribal entity, military, qualified nonprofits like schools, charitable, civil service, things like that. Like our agency is one of those. And I just talked about this. All right, so when it comes to maintaining progress, we got to schedule your monthly meetings with yourselves to review and see how we're progressing, look at our bank statements. Yeah, get excited about it. It's something we want to see how well we're doing with reaching these goals, keep our space decluttered, keep our mind healthy, and monitor that progress. So the theme of 2021 is to be mindful, be aware, think about things before we just put our hard-earned money toward it, and all of that, especially this year. It's been a very stressful 2020. So I think that people compensated for that stress by buying things. I could be wrong. I know everybody's in a different position, but that's part of it. And then our last few slides, our agency is here to support the needs of our community. So we're offering counseling sessions Monday through Thursday. We take them from 8 a.m. until 7 p.m. Well, 8 is the ending time. And then Fridays, we're here from 8 to 5. So if you're feeling overwhelmed or you need support or guidance, we're here, especially if it's like rebudgeting or trying to pay off debt. And we're committed to helping provide guidance to get that peace of mind. So it's affordable, it's individualized, it's confidential, comforting as well as motivating to just meet one-on-one with someone. And everything is being done currently over the phone. There are some video calls if you prefer that as well. And then the services that we offer are budget and credit counseling, debt management programs, which helps you to consolidate the bills at the lower payments and the rates. Now the financial empowerment counseling is ongoing counseling where you meet with someone on a consistent basis. You don't even have to have debt. Maybe you just want to spend your money differently, or maybe there's some goals that you're trying to attain and you want to meet with someone to educate you and to help you understand. That's a financial empowerment counseling, and you can get connected with someone by contacting our agency. We also offer first-time home buyer education and programming, as well as foreclosure prevention counseling. So a lot of people are on different programs right now, like deferments and forbearances. So we're just urging people. It's very important because it's a big thing. This whole workshop was really designed to educate ourselves about budgeting and reaching goals and, managing debts. But if anyone's in a situation where they're really fearing that they're falling behind, or they're working with their lender, or they're not sure what to do, please, nonprofit housing counseling agencies offer support with that. People lose their homes a lot of times because they're too scared to reach out for help. And we just want to make sure people are aware that we are here to help if that's the case. And then we also offer reverse mortgage counseling and bankruptcy counseling. Sessions are booked for about an hour. We look at your goals, we look at your budget, and we just try to help you craft solutions to reach those goals and get that peace of mind with whatever it is. I kind of just said this too. If someone's facing foreclosure or delinquent on a mortgage, there are options to avoid foreclosure or maybe stay in the home. There's loan modification, deferment, payment agreements, and that can be really, really overwhelming to understand all of that. So we are here to support that, or delinquencies on debt, or just education in general. So here's our contact information. There's also an evaluation that will be sent out. If you have any questions, you can always reach out to me. There's our number, all the contact information, and that's really it. That summarizes our workshop today. So I hope there was a lot. We covered a lot, but I do hope this was helpful, and it helps individuals.
Yeah, Andrea, thank you so much. We did cover a lot, but I like to sum things up. So some big 3 themes I took out of this. One, your budget is your budget. It's not going to look just like everyone else's, and that's okay. You really have to analyze what you want, what you need. It's your life, your budget.
Mhm.
2, there's a lot of things out there. There's a lot of confusing things. There's a lot of terminology. There's a lot of specifications in different a loan versus the different types of loan and all that. That's okay. That's the way it is. But like, don't be afraid to ask questions to clarify it. Get all that knowledge. This is the year, would you say the year of learning, the year of
Money mindfulness.
the year of money mindfulness, the money, being aware of what's going on. So be aware, and that's okay if you don't know everything, because 3, there are services out there. There's Andrea out there. There's people at CCCS there to help you. So it's okay if you don't know it all. Just being mindful, being aware, and any progress you make on your goals, again, your goals, is really great and really awesome. If you didn't see yet on the chat, I went ahead and put that survey just to kind of give feedback about the evaluation. It'd be really helpful to Andrea and her team. But if you need anything, feel free to go back through. You have all the slides on YouTube. If you need to, pace it out a little bit because it was so much information, do what you got to do. If you have any questions too, feel free to reach out to us and we can connect you to Andrea and her team as well. Thank you so much for tuning in, everyone. I can't wait for our next virtual happy hour, and I hope everyone has a great Wednesday, and hopefully we get some more sunshine tomorrow like we did today.
Awesome. Thanks, guys.